in my opinion, I think, not an expert, not an economist. I think we're going to see much of the same the rest of the year. Like, I don't think we may see one more rate drop near the end of the year. I don't think we're going to see another July drop, but I mean, I could be wrong. But I guess we'll probably see the Bank of Canada drop rates closer to the end of the year, kind of like October to December. Just that one more rate cut. And I think fixed rates are going to probably stay around the same too. Like, I think we might see them come down. We might see you might get a 4.69, a 4.74 in some places, but I think we'll probably stay in the high fours for the rest of 2024. But as we've seen, Greg, similar to the listings and sales and everything in Ottawa, how they shift quickly, like rates can also move really quickly, as we've seen in the last couple of years. But my opinion is that we're not going to see any crazy changes in rates. I think we're probably going to see everything stay around the, 4 3/4 to 5 1/4 rate for the next 6 months or so,
You're listening to the Ottawa Real Estate Podcast with your hosts, Paul Stevenson, David Warren, and Greg Campbell. Let's see what's going on in the world of real estate today.
Hello and welcome back to the Ottawa Real Estate Podcast. My name is Paul Stevenson. I'm a level 2 mortgage agent in Ottawa, and I'm joined as always by my colleagues, co-hosts, David Warren, level 2 mortgage agent and owner at Referral Mortgages, and Greg Campbell, a realtor extraordinaire and partner at the Campbell-Maric Group. Whether you're a first-time home buyer, an investor, or just interested in what's happening in the local real estate landscape, we're here to bring it to you live every Tuesday and Wednesday morning. Wednesdays at 10 a.m. Here we are, gentlemen. I'm not doing it again. We need a script.
That's great.
That was a second go, and I don't know if it was any better.
No. Much worse.
I guess
much worse.
I think maybe we should just lock one in now,
Mm-hmm.
It's always fun doing the AI. Give us something to read about us.
Yeah. I feel like my mind's in a million places right now. Work is like work. Mortgage brokering is wild right now. Real estate is wild. We were just saying before we came on air that like it seems like there's no clean files anymore. And even when the clients are, your dream kind of, 2 salaries, savings, like the unicorn of files that don't exist ever. But when you do get those, there's still something else. There's still some little asterisks.
Something comes up.
And I'm hearing the same thing from lenders. Like the underwriters I'm talking to at our lenders are saying the same thing. Like every file is fuzzy. There's always some weird thing. And I don't know if that's post-pandemic, because it seems like things are crazier. If it's just the state of the market, increased rates, people are more strapped financially. Like there's just a lot of moving parts, and it makes it more challenging to be good at our job. But Dave, you know what? We're vets. We're a decade plus in here. So we know what we're doing.
Slug through it.
Challenging.
Just slug through it.
Yeah.
I was talking to somebody the other day about how just amazing it is. Like she's like, when did it change? She's like, do you remember when it changed that rates actually started impacting what was happening? And I thought I guess it was when they started dropping like crazy, pandemic style, because before that it was never really like, it was like, talk to your broker. These are the rates. Like, these are what your options are. It wasn't like watching the news, waiting for the countdown for like 30 days. People like, I'm waiting just to see, when did that happen? I guess it was pandemic, right? That's when all of this frenzy over rates started.
I mean, certainly almost every 10 years has been like bank prime is plummeted because there's been something in the market, whether that's the pandemic or .com bubble or '08 financial. It's kind of always been every decade, basically, give or take. So there's always that like drop, but then always, so to your point, like kind of, but it's typically been like a slower pickup. It hasn't been such a monumental and drastic increase. So I think people, are being priced out into, Paul, your point of every deal being hairy. I mean, people are having to get co-signers on where they, parents on that haven't had a mortgage or had to get a mortgage in 20 years. And so they're like, what the heck? You're asking me for all these documents. Like, what do you mean? My house is paid off. Like, why do I even need to supply this kind of thing? And, or newly self-employed people coming out of the pandemic saying, you know what, or leaving their current, becoming self-employed, which obviously causes wrenches and things. So I think people really are just watching rates. It's harder to qualify. More and more people on each deal, 3-4 people on almost every deal. So it's, and prices are continuing to go up. I mean, prices were up, almost 1%, 0.8 in May. again. So in Ottawa, just, it's not making it easier to qualify. That's for sure.
It seems like, I mean, since the rate announcement next Wednesday, which everyone who's listening clearly knows, because every professional in real estate that they have ever touched, I'm sure, posted about it on their feed or story or what have you. So rates went down a quarter point, or the Bank of Canada's benchmark rate went down a quarter point. And Dave, you had a really good analogy last week, or kind of like calculation of the difference that makes for people. And Greg, we had a meeting last week with the teams in our office here, and I kind of broke down exactly that same thing, like the difference in payments based on a slight decrease in rates and even a larger increase in rates, and how it actually is in some cases worse for clients to buy when the rate's down, because as you said, prices are up. So it ends up costing them more in the long run. And going back to what we say every week, buy when you need to buy. But to the point of the announcement coming out next Wednesday, I was like, last week I worked till probably 10 or 11 p.m. every night and after the announcement, because there was too many people requesting, like existing clients, people that are approved and signed, people that are shopping, past clients, like everyone wondering how this impacts them. How does this impact me? What change does this make? So everyone's conscious to the rates, like you said, Greg. Like most people, once they get their house, it's like, okay, we'll talk about it in 5 years. Or people that have signed their mortgage documents, most people are like, okay, great, we got our rate, we're approved. Let's move on to focusing on the moving company or something, Now it seems like everyone is so hyper-focused on rates. And Dave, I know when we first launched in 2013, we made a point to not focus on rates. Like every time we'd have our conversation, it was about service, advice, products, because you want to stay away from rate, because rate really doesn't matter at the end of the day. But now it's the headlines, it's what everyone's focused on. Bank of Canada this, Tiff Macklem that, like everyone's focused on rates. So that's where the discussion goes, and that's what people think of.
And to kind of your point about not focusing on rates, more so in the sense that, even back then there was a lot of rule changes. This is back, B20 changes and things like that, which kind of clamped down on how qualifying worked. So it was more, again, like there's always changes in the market. There's always, back then I remember kind of saying the exact same thing. Like there's never any easy file, because they changed the qualifying parameters, and then they brought in the qualifying rate, and they reduce the amortizations, and they, so there's always been constant changes. So in a lot of cases, it's just been finding solutions of how to qualify those borrowers for that home, and then rate being, that secondary component. But yeah, it's been certainly challenging. And to your point, last week, leading up to, and especially after that rate announcement, everyone coming up for renewal, everyone currently shopping, reaching out. I think it's, also a byproduct of just being so much information out there and being on everyone's social media, like you said.
Last week after we were talking about, the swarming, coming, which led for great views on last week's episode. But it happened, man. Like all our listings got more showings. I got more buyer calls than I have in probably the last 5 weeks. Out on showings, I was in multiple offers. Like, I mean, it happened, and it'll happen again, I guess. That's just how it's the nature of whatever has been created here, through the media and society in general, I guess. And I mean, I'm working with it, but it went through the roof. So I don't know if that's going to keep moving like that, but I'm telling you, there's a lot of listings out now, but there's stuff's moving, but the prices are kind of sticking around where they're at. The multiple offer I was in, to be fair, was a rural property, and it was at a lesser value, but that's why. So I haven't heard of anything happening on the big ones lately. I have seen a lot of price reductions as well. That's generating more showings.
Well, I think at the end of the day, like the buyers are holding the bag, like in the sense that they're in full control right now. Like people are taking their time, which isn't a bad thing, but they're taking time. There's so many options now. Like you said, there's more listings coming out every day. So people see a property they like, oh, there's another one coming soon. Let's just wait, see what that one looks like. Or, people are kind of in the market, but also there's no urgency for buyers, which I think isn't, again, not a bad thing, but that's why we're seeing the days on market kind of sitting where it is. The prices are kind of stagnant. It feels like May was a pretty slow month historically compared to what it normally is. Like April, May is usually when everything's pumping. Like that's usually the busiest months, right? And then you get to closings in kind of July, August. But I was listening to, I wish we had our predictions there from the beginning of the year, where we predicted the June rate drop. But we were also saying that, the busiest buying months would be, February, March, and then again in kind of August, September. And it seems like that's kind of the trajectory. I think people are probably now, as we said last week, now that it's dropped once, people are going to wait to see what happens with the July announcement. Yeah. Well, maybe they'll drop it again. And then everyone's kind of sitting and waiting. So yeah, I don't even know.
There's a lot of great properties out there right now.
Yeah.
And, I've seen some, and I walk into them, and people are like, well, it's this weird thing again, where it's like, it's spring market, I guess, but things are moving a little bit slower, it seems. And then I'm walking into properties, and they're thinking like, well, maybe we'll wait for something else. And I'm looking at this home, and I'm like, this property is incredible. I'm like, you guys should just, I know instinctively, I've done it enough. I'm like, this is a one that you should go for. But it's obviously not up to me. It's just, guidance and whatnot. But I'm seeing a lot of that right now, where I'm walking into homes and being like, this is fantastic. And it's just sitting.
Ottawa, and I'm sure in Toronto and Vancouver as well. I don't know, I'm not as familiar with those markets. But in Ottawa, we know that the market shifts outrageously fast. Like, it'll be stagnant for a week. There'll be 3 months of inventory. Yeah. And then in 2 weeks, there's 1,500 sales, and there's half a month of inventory, and prices are up 10% and everything. So all those homes that are sitting that are perfect, like, people are going to overlook them, or, there's something else will come out, or, this one's 10,000 less, or what have you. And then in 3 months from now, they're going to be kicking themselves because, everyone starts buying in quick succession, and those prices are no longer available. We could have had that for, $750 or whatever it was. And now that same property is $825 or $850. It just always happens. We are seeing a bit of a trough in the sense of where prices were in 2022, but we all know they're not going to stay here. Like, they are going to increase, especially as rates come down slightly. So yeah, if you're a buyer, it's good to have some patience and look through the different houses, but also waiting a year and a half, like, you're going to kind of be shooting yourself in the foot, in my opinion. I think, 3 to 6 months is kind of the ideal shopping window, right? Like, you kind of get to know the market, you look at some places, you get some comparables, and then you get more aggressive in your offers.
I've got a little note here from, this was in
No Test, Greg.
Better Dwelling. I'm just going to read through this. Excuse me. Canadian real estate markets have stalled with the belief that rate cuts would revive the market. However, BMO's analysis suggests that while the Bank of Canada's rate cuts may boost sentiment, it won't significantly improve affordability. The market faces challenges from rising inventory and stretched affordability. Key points: rate cuts and market impact. Despite rate cuts, fixed mortgage rates are already lower, as said on TOREP, and most borrowers have moved to these cheaper rates. Thus, the rate cut offers minimal actual relief. Current lending trends. The majority of new loans are fixed rate, with only 10% being variable rate over the past year. Affordability issues. Even with recent home price corrections and lower fixed mortgage rates, affordability remains strained. Returning to pre-pandemic affordability levels would require significant decreases in mortgage rates, further price drops, or substantial income increases. Market activity. Home sales in Toronto and Vancouver dropped by 20% last month, while inventory surged, indicating potential downward pressure on prices if buyer activity doesn't increase soon. Analysis of BMO. What do you guys think of that? It's pretty accurate.
Yeah, I mean, I think that's pretty well what we've
been talking about,
kind of talking about as well.
Yeah, and I mean, I think, Dave, you mentioned a while ago that it takes about 6 months. There's about a 6-month lag after any sort of rate increase or decrease to see the actual impact of those changes. And we're still dealing with like the ripple effect of, 8 to 10 rate increases in the last few years. So all those listings that we're seeing are probably all the people that might have taken the variable rates 4 years ago. Like, now people are taking fixed because they're actually, a bit more consistent and actually predictable. Whereas a few years ago, Dave, I would say half of 50% of the clients were taking variable rates. So all those people that are in variable rates likely have seen their payments balloon and are now at a place where, they they have to make a change. So I think we're seeing those listings come up. I think now, as you said, Greg, people can afford less on their pre-approval, especially with where rates are and the stress test. People are qualifying at 7%, 7.5%.
Mm-hmm.
So people just can't, like, the money's not going as far as it was. And obviously inflation, as much as they claim that it's coming down, like everything is still, prices are insane right now for everything, you know, like I think bread is $5 a loaf or something now, you know, like it's just wild where prices are. So I think just from an affordability standpoint, people have been forced over the last year or two to reflect on their own spending, their own budgets, their own costs, and are trying to figure out like where can we actually land that makes sense, where if something like the pandemic happens again, we're actually in a place that we can afford to live and we're not, you know, running up our credit cards and our consumer debts, as we saw, you know, Dave, I think you talked those statistics months ago, but talking about the increase in consumer debt because people are basically spinning their wheels trying to maintain their current lifestyle.
Mm-hmm.
And now we're seeing, you know, the tail end of that where people are like, okay, well, now we have to make a change because things aren't coming down. That one rate decrease saving you $100 a month is not going to change your overall financial picture much, you know?
No, and I think we're at a point in life, in general, I think as a species, I'd almost want to say
You
that
speciesist.
as a species, humans, financially, if you have not been investing for years, if you're an employee, oh my goodness, your raise will only be, you know, slow over time and probably insignificant versus the rate of inflation and whatever else, that you have to have something else if you really want to live life, you know, to its fullest and have a little bit of freedom right now. We're just seeing more of that. And a lot of people are taking on second jobs. I know people who are making over $150,000 a year and they're driving Uber Eats in the evenings.
Mm-hmm.
Like, right. But they're just like, I don't know what else to do. So at least they have the balls to go out and do that. They're not sitting there saying, poor me. But that's that's where it's at. And it gets scary. Right. I saw something, Redfin CEO was on, I think it was the David Lynn podcast in the US. Like it's a Canadian podcast, CEO of Redfin, American. And he was talking about it that in the US in 2020, it was the average income to get a home was $59,000 US. And now it's $106,000 to buy a home. Like you have to basically be qualifying at that. And that's almost double in 4 years.
Yeah, I think I sent you guys something last week where it said couple making $200,000, or sorry, to buy the average priced home, you have to be making, I think it was like $200,000 as a household income with no debt at all.
Yeah.
And savings for down payment, you know.
Here comes the doom and gloom, guys. Here
Yeah.
Well,
around that 15-minute mark
in the
just-
script.
Well, I know that article there that you'd sent, there were a lot of people asking and commenting of like, you know, 200,000, that seems crazy. And really, at the end of the day, it's 4 to 4.5 times your income without any other debt. So if you have a vehicle, that's going to eat away at that. If you have a line of credit, a credit card, anything like that, that's going to eat away, student debt. So really, you're qualifying for an $800,000 home without any debt. The average home price in Ottawa as of
and that's what the average home price.
So a single family home, CTV Ottawa article today, a single family home in Ottawa last month was in May of 2024 was $736,000. Excuse me, up 1.1% compared to May 2023. So that's the average price point. That's in Ottawa. That is not, obviously the national average is taken into account the most densely populated cities, which is Vancouver and Toronto, which obviously drive up pricing, but there's also the most populated. So, you know, Montreal, Toronto, Vancouver are driving up those. So yes, you know, the Maritimes, you're not going to be needing that type of income to qualify because there's only 1 million people in all those provinces, and, you know, the prairies but Alberta is getting there as well. So it's not that crazy once you factor in if you have, you know, an average vehicle right now to finance or lease, they're typically $800 to $1,200 for a lot of them. For, you know, an SUV that's, you know, $70,000 SUV, which isn't crazy. Like that's not a crazy priced vehicle anymore. You know, that's going to eat away at $900, $1,000 a month, or even higher, depending on your credit and your payments. That's eating away at that 200,000. Like diminishing that return. So it's not that far fetched to be 200,000 and just being able to qualify for an average price home.
Yeah.
Yeah. And everything's up. Gas is up. Insurance is up. Like all these, every other company also needs to increase their prices to be able to afford to live themselves. So everything just gets more expensive for everyone, right?
I was watching this thing in Florida. They were talking about, I mean, Dave, you might know a little bit about this. You spent some time in Florida, but I've been watching Florida a lot lately, and just the whole state, it seems, well, not the state. It's obviously more certain neighborhoods, just kind of like any city that you're in, certain neighborhoods get hit the most. But they were talking about this realtor. He was saying that never before in his career had he been working with so many buyers that turned into renters, because it just didn't make sense, because they could rent the same house at so much less than buying it, that it was like, well, just rent here for a year, 2 years until things potentially change. Because I guess there's a lot of neighborhoods that are just dropping like huge value.
Yeah, I mean, Florida's seeing a huge, especially the Miami area, the like boom and growth there is astronomical. But it's the same thing. I was just in Toronto last week, and it's the same thing I hear and see from people in Toronto. Like it doesn't, you can rent for far less than it would cost to buy and own that same condo in Toronto, once factoring property taxes and condo fees and mortgage on it. So in a lot of cases, it does make sense. But again, it just depends on your strategy. And we've said it before, like renting can make sense for an individual based on the time where they are in their life, what they're going through, what their plan is. Like homeownership isn't always like the right plan now or even ever, right? Like
we're also in real estate, right? So it's like someone who works like Dave, your wife and you own a gallery. It's like, obviously you guys assume everyone needs art, like of course, like, cause we love art, like we need it, but we're in industries.
Buy, swarm.
Exactly. Swarming them. But we feel like it's because everyone we deal with is buying homes. So we just think that's the norm, right? Like everyone buys homes because everyone we talk to is buying a house, but that's not always the case, right? Like there's a lot of people that do rent, and as you said, it's a personal choice, and it does change depending on where you're at in your life and what the priorities are and what your timeframes are and stuff. I have clients that own multiple rentals here in Ottawa and live out east just because that's where their work is right now, but they're renting out east, and they own a bunch of properties here, and they'll come back and live in one when they're done. But it changes. Life changes.
Life changes,
gentlemen.
Keeps
Life
moving.
Changes.
Just like us, we keep moving.
Great article I read this morning. Same way, what, Greg? Finish that thought.
No, go with your article.
Everything grows.
Everything grows.
Everything changes.
Are you trying to grow your mortgage business? Centum has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with Centum. Learn more at joincentum.ca.
Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction. At Geltin Poirier Avocat Lawyers, we love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you. For an effortless client experience that opens doors, call us at 613-744-4488 or visit our website at geltinpoirierlaw.ca. Let's get to the heart of your deal.
Changes growth, right, Greg? So this is an article from Canadian Mortgage Trends. Spring housing market stalls as home buyers remain on the sidelines. So I have the Ottawa stats, but I just want to read this first headline here. It says, Canada's typically busy spring market stalled as home buyers largely chose to wait on the sidelines for confirmation of the Bank of Canada's first rate cut. So it gets into all the stats, major cities. I'll make sure to put it in the chat. But for Ottawa, it says sales in May 2024 were 1545, which was down 9%. And I know you touched on some of these last month, Greg. So just kind of reiterating.
Go ahead.
Benchmark price, all housing types, 651,300. So that was a plus 1.2% increase year over year. New listings in May, 3,034. That was up 26%. And active listings, May 2024, 3,552. That was up 59.4% from May 2023. That's like That's
huge.
staggering. No, like a 5-10% increase would be like, oh wow, there's more listings. 60%, it's almost like so big that you're kind of numb to the number, right?
Yeah.
You're numbered.
Wow.
That's almost like a mood boost.
Yeah.
Wow.
Yeah, the numbers, new listings, it's the highest it's been since 2018.
Yeah.
Right. It's impressive. I think that number is going to go up this month, depending on how many people actually attack and buy. But we'll see. I mean, there's still a few weeks left in June. I can't believe it's June. What happened? What happened to us?
Dude,
Who
we were
are we?
at
In mid-June at that.
yeah.
It's mid-June. The year 2024 is over.
We were at Madden soccer game last night. June 10th.
Christmas.
June 10th, 6:30 p.m. Freezing. Everyone has jackets on, hoodies, blankets,
God.
ridiculous. So I want to stick on rates for a second because I feel like again it's the topic of conversation, and again this will just drive more conversations about rates. So I'm shooting myself in the foot here. But another article that I was reading, it says fixed mortgages are falling. Again, not due to the Bank of Canada, but it says experts explain why and weigh in on fixed versus variable. So it says both existing homeowners and new home buyers, are benefiting from a drop in interest rates seen over the past few weeks. Following last week's Bank of Canada interest rate cut, which lowered rates for existing variable rate mortgage holders, bond yields also plunged, triggering reductions in fixed mortgage rate pricing, which again, guys, just confused the issue even more because the bonds went down, so fixed rates went down. So then people thought, oh, Bank of Canada dropped the rates, the fixed rates are lower, which again, anyways. So it says last week, Government of Canada bond yields, which influence fixed mortgage rates, slipped 36 basis points before partially recovering. Mortgage providers across the country responded by lowering their fixed mortgage rates by as much as 25 basis points, so 0.25%. So big banks are the big exception. It says, while most lenders have been busy lowering their rates, the big banks have remained largely silent. Posted special rates from all the big banks remain practically untouched over the past month, aside from some discretionary pricing. Over the last 6 months, the big five have written off over $3 billion of bad debt, which is pretty wild. Being a little slow to drop rates will give them a little padding to make it up. So that makes perfect sense. So in my opinion, I think, not an expert, not an economist. I think we're going to see much of the same the rest of the year. Like, I don't think we may see one more rate drop near the end of the year. I don't think we're going to see another July drop, but I mean, I could be wrong. But I guess we'll probably see the Bank of Canada drop rates closer to the end of the year, kind of like October to December, just that one more rate cut. And I think fixed rates are going to probably stay around the same too. Like, I think we might see them come down. We might see you might get a 4.69, a 4.74 in some places, but I think we'll probably stay in the high fours for the rest of 2024. But as we've seen, Greg, similar to the listings and sales and everything in Ottawa, how they shift quickly, like rates can also move really quickly, as we've seen in the last couple of years. But my opinion is that we're not going to see any crazy changes in rates. I think we're probably going to see everything stay around the, 4.75 to 5.25 rate for the next 6 months or so,
Which
what do you think,
reasonable?
I mean, really, the U.S. economy keeps chugging along, and that's what's keeping our bond market inflated. The 5-year bond is very closely tied to the 10-year treasury, and the U.S. economy keeps printing money and keeps, really chugging along with no real end in sight. And so if that continues to happen, our bonds will continue to be elevated and keep our fixed rates high. So until there's something changes in the U.S. as well, I think that'll, to your point, Paul, I think they will continue to stay in and around the range of what they're at right now for the foreseeable future.
And this is where we're going to get Steve to chop and edit in all of our predictions from the beginning of the year, and then where things are today. I know we talked.
Didn't we nail that? Did we nail that?
I think we might have. Swarm.
One thing I wanted to touch on, guys, I sent you that chart just quickly touching on rent. So I know we were talking that the average Canadian rent hits an all-time high at $2,202, up $200 from the previous month, and 9.3% up from a year ago. And this was from rentals.ca. So it says rent prices have been climbing steadily in recent years, rising $540 or 32% since hitting their low of $1,662 in April 2021. Canada's rental market is entering the peak summer season with continued strength. President of Urban Nation, which co-released the report, markets such as Vancouver and Toronto that had experienced some softening in rents in previous months are stabilizing near record highs, while many of the country's mid and small-sized cities are still posting double-digit rent increases. So the reason I'm bringing this up is because the chart I sent you guys is showing the average time it takes. This was from, let me just actually pull it up. This is from the Ontario Tribunal. So this is basically how long it takes, the average months to a hearing for applications in Ontario for non-payment of rent and to collect rent from the tenant from what they owe. Currently, at the end of 2023 Q4, it was still sitting at 4.5 months. So just to get a hearing to potentially get rent from the tenant who's deciding not to pay, 4 months.
So, and then beyond that, there still needs to be a decision. There still needs to be a marshal that's sent out. The tenant's still removed, and that's still not guaranteeing you to get any rent, because sometimes getting blood from a stone is a little difficult sometimes.
I'm assuming if they're not paying in 4 months, you're not getting any rent.
It's mind-boggling how terrible the LTO is. Like it's staggering. Like I have friends that go that
you could feel Dave's pain in his face.
Oh, it's crazy. It's crazy. Like I've friends and clients that have tenants that aren't paying, ones that are like others where they're complete drug users, like in a multi-family building where, they're constantly disrupting others, not paying, disrupting to the point of like breaking windows. They can't get them out. The landlord and tenant board won't even get a meeting. They had a hearing. They still didn't do anything. Like it's obscene. And they can't physically remove them, because then otherwise they're charged, even though they're leaving drug paraphernalia around when there's like kids in other units. It's wild. There's so many instances where it becomes like, and I've heard it from clients of like, I'm not going to invest in residential real estate in Ontario or Canada because of how long it takes to get rid of a tenant. In the US, you don't pay within like 5 days, the tenant's out in so many different states, because that's how it should be. Like the banks expect that that individual to make their mortgage payment. If they're late by 30 days, it's a mark on their credit, and within 90 days, the house can even be start to be foreclosed on. They can't even have a meeting yet with with a mediator from the landlord and tenant board before they're even getting foreclosed on.
But did you get the memo? Right?
Yeah.
Did you send the TPS report, David? So old Office Space reference there for anyone listening. And what is the reason for that? Like, is it a staffing issue? Is it just a protection of
staffing?
Of tenants? Like
staffing. Like the whole process, but they moved a lot of it to some of it to virtual, but it's still such a slow process and just such a lack of staffing, which seems pretty obvious what that solution is. Like hire more mediators, hire more judges, like former lawyers that are looking to just, act as judges or mediators in their retirement. Like that's literally what
but of course,
people on the board are.
For that. There's no money for that. Taxes more, but there's no money for the landlord.
Well, every application is like you charge your fee. Like every time you issue like an end notice and things like that, you have to go file and you have to pay a fee as well as a landlord. Like you're paying the whole way
to evict someone.
Yeah. And for the marshal, then there's another fee for the marshal to come. And the whole time you're still not receiving any rent on that. And you're paying
those fees,
your mortgage, and you're not getting any leeway there, or on your property tax, not getting any leeway there. Yeah. Like why, we have a housing shortage, and why as an individual investor, why would you want to invest in an area or like a province where it takes 4.5 months to just get a meeting because somebody hasn't been paying at that point, they haven't been paying for 5.5.
Yeah.
Yeah. And I wonder if he just went to tribunal or whatever it is, and the judge no-showed.
The judge no-showed.
He waited for an hour for the judge no-showed. They just called it and they said, we're going to reschedule for another 2 months down the road.
Rage.
Rage, right?
That would be rage. I wonder also if part of it is just they have nowhere to, like, you kick these people out and then where do they go? Like, there's nowhere to put them either. So it's like subsidized housing on the citizens that own the properties. You know, it's pretty wild. I don't know. It's a mess. It's an absolute mess, and like something needs to be fixed. But I saw that stat and I couldn't believe it. I like double checked the data. I'm like, this can't be accurate that it takes this long. But I'd heard stories, but.
Sorry, I keep interrupting before you're done there, Paul. I'm here. I wanted to share a note that for anyone that's looking to rent, there is a lot of competition right now. For every rental listing that we get, we put out an ad. We get at least 20 to 40 people responding on Facebook Marketplace, and we're getting about 10 to 15, I'll call them like tenant intake forms, filled out and sent to us. So make sure you have everything in order. And that's what we do. If you're looking to rent, message me. We send you a form. We make sure that you have everything in order and that we're prepared when we go in to submit an application on a property. But it's aggressive out there right now.
And is there a type of property that is most aggressive? Like single family and
rentals?
townhomes? Yeah, I'd imagine single family and towns.
Townhomes. Townhomes or stacked townhomes.
Mm-hmm.
That's like the hot market for sure. But I mean, we have a $2,800 2-bedroom condo downtown on Slater right now that we just put out last week, and we've got an application today, and we've got about, I think, 8 showings happening now. So I was actually surprised that there was that many that quick, but I think it's people coming to town with jobs for the fall or starting in summer, and like the students are starting to look for September as well, so their families are looking at properties. But yeah, I mean, it's active. Rental market is very active, so much to the point that there's way less on the market now than there was even a month ago. Like this girl messaged me the other day. She's like, I really need help finding around. I'm like, okay, let's do it. Where do you want? What is your price? I'm like, oh, perfect. This is great. I go and look, and I'm like, yeah. So there's only 6 for us to see. I think there would have been 16 for us to see 4 weeks ago at the same time.
Oh,
and don't forget about your pet clause. Pet clause.
Well, this
still
is
around.
She was actually referred to me because of the pet clause through a friend, through a client.
It's your niche, Greg.
You're like, oh, this agent, he couldn't get us. He's not doing the work. We have pets. We're just not happy. And then he's like, I got a guy for you. She's got a cat and a rabbit. So we'll see what happens with that. But I've got that bulletproof pet clause, bringing that back into effect. Can't wait.
I love it. Pet clause Pappy. He's back. All right, gentlemen. Should we slide into the mood boost?
Slide in.
Let's do it.
All right. I got 3 today. I think there's 3 every week. I should just not even say that anymore. I have 3 today. Number 1, someone complimented my parking today. They left me a sweet note on my windshield that said, parking fine. Parking fine.
Yes.
Number 2, I child-proofed my house, but the kids still get in. Doesn't slap as much without the symbol, eh?
Well,
No.
Post-production, you'll hear it, but for us, it's a little dry. Makes you feel like, I need crickets. And last but not least, number 3, I've decided I want a pet termite. Speaking of pet clauses, I want a pet termite. I'm going to call him Clint. Clint Eastwood. Clint Eastwood.
For those of you that know who Clint Eastwood is.
Yes.
I feel like many of our listeners do, but many of our listeners don't.
Everyone knows Clint Eastwood, not Eastwood. Be sure to subscribe, comment, share. Last episode was great. We got a lot of interaction, a lot of comments, a lot of people reading the headline and not listening to the show and making aggressive comments towards us. And also, if you need help, if you're looking for advice, we're all here for you. All 3 of us. You can reach out. Our phone numbers, our emails, all of our websites, contact, everything's in the description. So don't hesitate. We're always open to a chat, and we'll help guide you through the process. We'll help you buy a home. We'll help you sell a home. Well, Greg will.
I will.
David, I won't. But thank you for tuning in. We love you all. We'll be back next week.
See you next time.
Deuces.
Thanks for tuning in, everyone. We hope you enjoyed today's episode. Please remember to like, share, comment, and subscribe because we'd really like that.